The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
I was just checking my email on this side and Tiger YouTube on that side. Yes, there we go. So we're looking at the Dow at this particular point up 191. Now, there was some news during the evening. So I had an indicator, my Chapman wave trend gauge reading was very high yesterday, which suggested that there should be a rally overnight in the E-minis, which there was, and then there was a sudden sharp pullback. Boeing, let's see where Boeing is trading right now. It's only down 1.46 at 157.63, but it actually went all the way down to 155, even lower pre-market. And that's going to be very interesting because it's come back some, and that's kind of helping the market, helping the Dow. Let me go through the numbers. The Dow right now is at 40,728. Up 201, very close to taking out the high that was made both yesterday and the high which was just under the high of Monday, which is at 40,000. Let me just get you that exact figure, 778.70. I give you the points because you go 1 penny above and it starts a leg B. I think we are very close to making a leg B. The 9-period moving average is still very weak, but it is now trending in both the 14-period, black 14-period moving average and the pink 9 are trending up. I'm hoping that this hope is one of those words that you got to put into a category that says that's got nothing to do with what the market is actually doing. It's what you wish. And the wishing is that we make that leg B, not just nominally, but we actually have a very strong power move up. And that's going to, so already the MACD's turned positive. Remember, I was saying the reason why we went long last week, quite aggressive actually, along the Dow, was because of the histogram. That's the difference between the moving averages, the 9-period differential, the pink line in the MACD, the moving average convergence, divergence, and the rising green line, which is the green line is the 9 differential. The pink line is the 26, the slower moving average. And the histogram was getting closer and closer because it's showing you that the distance between these two moving averages is getting narrower, and then it became positive. So now I can say that we've got a positive MACD. The 9-period moving average is still under the 14. When it crosses over, it goes green, and that's positive. So we're going to be watching that very closely. The reason why I make it pink is just to differentiate between the red. Let me just look at the, you can even see it in the Tiger YouTube, which is good. So with that said, look at this weekly candle going all the way down to the 200-period moving average of 36,536. We went to 36,661, just a hair above. And look at that green candle. Of course, that was spurred on by that Wednesday afternoon tariff reprieve by Trump, and that spiked the market. But now we've held very nicely. So as I see it, this is going to be very important. And I want to do this because I'm going to show you something that I find absolutely fascinating. I would never have expected it until I've been following it for quite some time, quite a few years. So the S&P has not gone above the high that was made last Wednesday of, I should have typed it in, 5481.34. Either yesterday when there was a really nice move just under, and today it's just under that again. But the MACD did cross positive. Finally, the stochastic is running nicely, and the on-balance volume has finally woken up a little bit and said, okay, yep, I'm going to join you, and is running somewhat. But here's the issue. You see this chart right here? Look at that. That is the S&P 500, but it's the S&P 500 low volatility fund. Would you have thought in this environment that you could get a candle like this in the monthly where the high of the double top high. Remember, we've been talking about double tops, and the S&P made this fantastic double top of 75.43 on the 20th of March, and then lo and behold, early April it goes back and it makes 75.21, misses by what is it, 22 cents or 23 cents, making a new all-time high. Double top, cup formation. Look at the technicals, how weak they were. That's why we were long the SPXS, which is the short position. And then we got out of it very fortunately, just almost at the high of that particular index. Look at this. The higher high by a fraction, a lower low by a little bit, and I can't call that C because you made a new recovery high. Oh, wait a minute. Did I type that in wrong? Oh, this goes back further. This goes back to the 75.14 high of November. I forgot all about that. November. So we did a triple top, right? But wait a minute. We are 3%, or something like 3% off the all-time high. We have just had a pretty serious, it depends on which index you're looking at, between 12 and 15 or 16% decline. And the S&P 500 low volatility fund, even with this, was that low volatility going from the high of early April down to the low of was that the 7th? Let me just check. Of the 9th, and then back again? I would say that's volatility. Look at this. It is even rallying today. It is up 23 cents at 72.78. Isn't that interesting? So there are places to hide if you want to hide, but in fact, I think that with the action that we're seeing right now, I think there's an amelioration, at least in the short term, of all the tension involved in the tariffs, even though we know that it's affecting and impacting many areas quite considerably. But the price is the price. And right now, what do we have? We have the S&P 500 up 44 at 54.50. So far, a pretty nice day. All right, let's go on. Now the laggard actually. So the Dow is up with Boeing still weak, up 6.61%. The S&P is up 7.4%, and the QQQ, even though the chart doesn't look great at all, the QQQ is up 0.98%, up 456 at 462.01 right now. Hasn't gone close to yesterday's high, could still do it, the day's young. An improvement in the 914, but it is still very far away from crossing positive. MACD's good, stochastics improved a lot. And what do we have? A telephone, not for me. Okay. And what we've got here is the QQQs are rounding some. Now I want to go to the IWM, and then there's a bunch of things I want to look at that I think are really pertinent to where we are at this particular moment. Number one is the IWM has a nice rally today, 0.96%. It's up $1.81 at 188.33, still lagging. Now I need to do this just to be able to show you the real action. Look, the SMHs, the semiconductors, they're up 1.34%, but they're really up only 2.70 at 204.31. They are still lagging a lot. You can just draw a quick trend line right here. Let me just do that. You can take it from there, but there's another one that's even more important than this one right here. So the SMHs, semiconductors, need to move up into the 210 area quickly.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. So we just made a PT in the 1-minute chart of the ESM. We made a leg B in the 5-minute chart. Only a leg B in the 10-minute charts. Think of this as daily, weekly, monthly. We went right through some support. Let me just move this over. I want to show you something. So I had planned, I had looked at this, and this morning I had planned that there was a chance that we could get a 2-click session. So I'm about to, right there, the 54, right in the 1-minute chart. I like to be able to talk things out, whether I'm right or wrong, because it just clears up my mind. But I had, in fact, planned to go along right, well, we didn't know where it was going, but right here, because there was this nice V-shaped pattern right at the low in the on-balance volume of the 1-minute chart. I thought, gosh, if I got to click it in here as it crossed positive, and then I could go back to my newsletter, and that was just finishing it up, that would be good. But I was so busy, and then as I was about to do this, I got interrupted. Just a telephone call. I had to call someone that was important, and completely missed the move. And then I thought, oh, well, this market should be pulling back at some point today. Let's just skip it. But that was the move. Look, down there at the 54.25 area, and all you do is you hold it, and look, the green 9-period moving average is green, 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 right up until, even with that pullback at 10 o'clock. Now it's turned pink. Isn't that amazing? Could have gone all the way. Yeah, let's go to where it turned pink. From 54.25 to 54.70. And now we're probably getting that pullback that I was anticipating. I anticipated that. And that's the other thing. Sometimes in our mind, we have a particular modus, not a modus operandi. That would be good. We have just this feeling. And the feeling I had was that we had a very nice move yesterday, and of course, as I say, we've been long the Dow, so it was a very good move to the upside. And I thought, oh, and then Boeing comes out, and the futures were low, and I thought, oh, I don't know how that's going to resolve, and then I got busy. So look at this. you miss a move. What do you do next? And that's what I've been working on for some time. What do you do next? I didn't have a chance to do what I should do next, which was stay with the 9-period moving average. And every time it hit that 14, that's an opportunity to go long. So I always treat this as, even though I've done this thousands of times, it's just a matter of getting your mindset to be flexible enough to say, regardless of what I'm thinking, that's the point. And Larry always says, trade what you see, and that's what you did. Didn't do that. All right, well, that's the way it is. There'll be plenty more, but I just need to sort of confess, clear up from my mind that I missed something and didn't hop on the train. Once the train's leaving, it doesn't mean to say that you can't get back on it. You got to look for the right. I didn't do that. All right, so now we've had that pullback, and we'll see what the rest of the day does. Meantime, back at the ranch, we went right to the 200-period moving average, both in the 5-minute and the 10-minute. So there is some support. Now it's breaking above the 5-minute, the 1-minute 200-period moving average. And that's going to be, all right, let's get back to our story. So this is very important. Look, we need the SMHs, the semiconductors. There's a lot going on with the semiconductors. You might find that one or two get some reprieve, but overall, there's this kind of tension about what's going to happen next. So let's just skip that part of it. Let's just look at the General Motors. So General Motors is trading down 58 at 44.55. It should be, if Trump is consistent with giving breaks to U.S. companies, it should be a beneficiary at some point. But this chart that we're looking at here is not a very pleasant looking chart. It's making some kind of a complex cluster formation between the 46, 40 level, and let's call it 41, let's call it 42. And yet it hasn't broken up, it hasn't broken down. And there's your 200-period moving average, which has been a springboard many times before. Right now, it's more a magnet line. So we need to see a close below 38 over the next week or two will be very negative. Holding here and then having a pop to the 46.80, 47.20 level, that will be a sign to say, aha, maybe they're going to benefit in these circumstances. Have a look at Ford. Ford right now is down 15 cents at 9.55. Did have a spike yesterday, I think, on that kind of news, but now it's pulling back. But the weekly chart, the monthly chart says, wow, that's not very good at all. Now let's go to the electric car company, Tesla, and that is up 3 at 255, just kind of stuck. That 200-period moving average in the weekly chart, which is rising, is now 231. That's been its support level and it's trying to bounce off that. Now, if you look at this monthly chart, I can get rid of all these lines. There's just too many lines. I don't like noise like that. You can see it was kind of a cup formation, went to a leg. I have to call that a leg C. It could be, nope, it's a leg. No, it could be an F/C, but it doesn't matter what it is right now. The daily and weekly charts are very weak for Tesla, and that's just suggesting there's a lot going on with Tesla, and it's just in this kind of sideways wait and see formation. So in that regard, I'm considering that let's just keep those things aside. What is working? And what is working is fascinating because look what we've got. We've got gold up 14 right now, up near the all-time highs, having made for 2 days lower highs from the all-time high of Friday. And the weekly chart has got this leg D, little doji candle. And now let's see if silver's playing catch up, because, that's what they like to do. The one runs off, the other one says, oh, wait a minute, wait for me. And then the other one catches up. So now what we've got is they've both done different things. Look at this weekly chart of the silver. It is just stuck in the range, in the middle part of the range. But isn't it fascinating? The 9-period moving average, with all of this pullback, the last 2 weeks, going from just over 35 down to the 27s. I mean, in a straight line move, that was horrible. But it's come back, but it hasn't come back as strongly in the V-shaped pattern that we usually look for. And that just says silver's still lagging. Now, some of the silver stocks, let's go to PAS, Pan American Silver, beautiful monthly chart, candle. The leg D that we were anticipating, we were looking at it the other day, has transpired. today. In fact, it's gone to a leg D in the weekly chart at PAAS 27.29, up 11 cents. Now, the whole thing for me is this really looks like a brand new A, but because it didn't take out the starting point for that last move to the upside over there, that was the start right there, alternate count. So that goes to around the 21s. Well, the last, wait a minute. Let's look at this, because if this is a brand new A, you've got a huge move. Oh, wait a minute, it is. Okay, so however I regard this, I'm going to call this an A. So this is a leg A in Pan American Silver, having gone from the 20 area up into the 27s. Today the high was 27.66, and new recovery high 30.56 was the high back in 2022. I'll talk a little bit more about this because it's just part of the Chapman wave notation. I need to show you clearly because we've got plenty of Chapman waivers out there. The Dow's down, up 8. S&P's up 65 cents. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Yeah, just looking at some notes here that I've got. Okay, I'll get to this all. So what we've got is, I'm calling this a leg A at the moment, Pan American Silver, which means that it's at 27.42, the 26 to 25, 30 area is going to be key support. If it pulls back and makes another high, that's going to be really important. Leg D in the weekly chart. So this is still very strong. Let me just look. Yep, stochastics at 81%. That's good. It's Pan American Silver. So a question came in. Could I look at Bitcoin? Yep, Bitcoin is trading right now up 110 at 85,275. This is the Chapman Wave Inside Track Repellent Zone. It looks a little messy, but I want to keep this rectangle here because it's just been stuck in this trading range between about 78,000 and about 88,000. It's just stuck. But it's holding okay, but it's not doing anything. Today was an attempt, but we want to see it by Monday, Tuesday. By Thursday, I'd like to see it hit the 87,500 level, if it's possible. I should mention we are long, and from quite some time ago, and we've taken a little bit off, but yeah, we are still long. So I'm still looking at Bitcoin futures as holding well, still in the holders digestive phase that I've been speaking about since it hit 110,975 earlier at the end of last year. And we'll see what happens next. So now I want you to look at the XLF. This is the XLF financials, up 53 at 47.68. A nice bounce from the 200-period moving average onto the 200-period moving average. It needs now to push away from it into the, I'd say, into the 50s at some point over the next week. So let me just see. Bank of America came out with earnings. It is up $1.41 at 38.08. We still remain long. Bank of America, usually by now we've got out of everything, but we've still got a small core position left. And I think it's holding well. And here's the other thing. In an environment like this, was this a self-made massive decline, or were we ready? We were ready for it. I spoke about it since November, December. I said at some point we're going to see the tech sector take quite a bit of a breather. I'm calling it a breather, but in some cases, some stocks will be hit quite badly. But they need a rest. And in that series of pullbacks, we're going to see what holds well. PG, look at this, Procter & Gamble. It's basically in that sideways range, where it's in this major up channel in the monthly chart, sideways in the weekly chart, lower lows and lower highs in the daily, but holding pretty well. Even today, it's up 68 cents at 169. You can go through Colgate-Palmolive. Look at that, a little bit better chart. It's actually quite nice right here at 95.47, up 48 cents, coming up to a Chapman Wave Inside Track repellent zone from the 100.18 high that was made back in March. So normally I do this to the outer wicks of the candle. But when I'm looking at it, I'm seeing that there were two candles, and the body of the candle makes sense at this point to achieve that as the trend line pivot point. It says this is still active, and if it go above it, I'll raise it somewhat. But in the meantime, this is a chart that we need to look at, because if Colgate-Palmolive starts to take out the 96, if it gets to 96, it's a 95.40. Anywhere in the 96s, all of a sudden that high that was made back on the 4th of April at 97.73 becomes a target. So XLP, that is the this XLP is the S&P Select Consumer Staples Spider Fund, almost has the same thing. Look, here's your trend line, and it's stuck in the middle of the range. And the monthly chart is still looking pretty good. It wasn't looking good earlier on, but now it is. And now look at this. So here I'm going to the outer level of that wick, because there isn't anything that says, hey, you could use that as a base of support. And there you are. You're into the Chapman Wave Inside Track repellent zone. If Colgate, the XLP, this is the fund itself, which has umpteen stocks. If this gets to, it's at 81.77 right now, up 3 cents. If it can not hold, it needs to, not trade, but it needs to hold above right now 60. That's, 82.40. If we can get to 82.40, chances are it's going to tackle the high of the 3rd of April, which is at 82. So I'm just showing you that not everything is clear. There are other areas that are working a little bit better. And here's something that is also very important. The TLT, we haven't gotten to that yet when I was doing my overview. TLT went to a double top, 92.79, then 94.09. I had to call that an A. There was nothing else to call it, but and we came slumping down to the 85s. Now you're at 87.44 and down 7 cents. Let's look at the bonds themselves. They have a slightly different notation. That went to the D. Right there at the 122 level, slumps to 111, trading right now at 114 and 30 seconds. Crude oil, let me go through that. Crude oil right now, just looking very, very poor. Here's the pattern that we're looking at, the lowercase h that goes to a lowercase m. And if it takes out on a closing basis, this is a monthly chart, but on a daily closing basis, goes below 53.09 in the continuous contract. That's going to be very, very weak. Now there are three things that I said I would look at here. Yes, so I wanted to just go through this. This is MKTX. This is a stock we once owned for a little while, and this is a long time ago, and it was moving up, and it was moving up in such a way that I thought, and it's really a platform. Actually, we're going back to 2022, I think it was. Was it earlier than that? No, I think it was 2022. And we went to peak A, B, C, D, E, right? All the way from the 216 level to the just under 400. And I kept saying to myself, what is this? It's a Market Access Holding Inc. And it's a platform for let me just give you the exact, I had it written down, but I had to rewrite it. So Market Access, it's called Market AXCSS does, and here it is. This is Market Access is a leading electronic trading platform for fixed income securities, primarily focused on global credit and rates market. It offers institutional investors and broker-dealers a platform to efficiently trade bonds, access a diverse pool of liquidity, and potentially achieve cost savings, according to the company's investor relations page. And so I'm just fascinated with it because it had this beautiful rally just recently from the 185 area up to 227, and now it pulled back, and now it's come back again. It's just a very interesting chart. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Right, so this is Market Access, MKTX Holdings Inc. platform for fixed income, global credit, and rates. So I just find this really interesting, just the speed. Oh, wait a minute. I completely forgot about, I'm looking and saying, why is that all pink? Now I remember what I did. About a week or so ago when I was looking at this, I drew in, this is called the Chapman Wave flat-based, unconventional flat-based restart. For those of you, I completely forgot about it. Every once in a while I do this and I forget to read it. I'll make this bigger so you can see it right there. So I type it in. I usually make it very tiny because it's something that I developed years ago. There's a flat-based restart. There's a particular technique that goes with that. It's almost like the instant restart, but a little bit different. The unconventional one is where I have an instant restart, but after peak A or B, there's a price movement that goes sharply lower, then it goes up, and then it comes back again to test it. That's like, I talk about this, and not that I've even watched the show for decades. Bart Simpson, that hairstyle, that spiky hairstyle. So I talk about that, and that's how I developed this to say, that says that no matter what happens, when it gets to maybe a D, sometimes even an E or an F, it's going to pull back and it's going to go sharply underneath the base. And now I'm looking at it, and it's exactly what I did, because I did the alternate count, ABCD, and I made it in pink to show that is the unconventional wave count. And then it plunges, and now it's gone back. And that's part of the whole rule of this particular technique. Holy moly, I forgot all about it. So that's interesting. Why? Because this has the chance now to hit 227.76 as a 225.56, and then got that same V shape that we're looking at in so many different charts to see, does it double top at the 200 period moving average, and is it telling us about the credit? Is it telling us about the bonds? Look, it's almost the inverse. Let me just see. Let me go to the TBT. Yeah, it's almost the inverse of the TBT. Let's go back to the TLT with a cluster from, this is almost the opposite, upside down. So that is interesting. I'm gonna do more work on this one. MKTX is the symbol. All right, let's get out of that and let's go on. So question came in about Netflix. Does Netflix come out with earnings this week? Maybe. So Netflix is trading up 52 at, let's see, 983. Let's go to 984. Oh, good action. So it went to a peak C minus in this arch formation. Broke the 854 low that was made back early March. It went down on the 8th, I think it was. No, the 7th of April. Hits the 200. Oh, this is what a lovely technique. It's the 200 moving average, exact. Goes to peak A and then goes to peak B, leg B right now. So whatever happens, if this is earnings coming out for Netflix, as it stands right now, the participants are thinking Netflix is going to come out with great earnings, and the all-time high was 1,064.50 back in February, around the 14th or so. And I remember it had a round number. Oh, yeah, it is. It had a round number 1,062 high, and then on the 15th, the day after, it had 1,062 high and a round number 1060 open on the 15th. On the 14th, it made its all-time high of 1,064.50. I remember that very well now. Now, this is going to be very interesting because look at this candle in the monthly candle so far. The month is only halfway through. It's going to be something to watch at the end of April because so far it's very positive. And so far you've got almost a falling axe formation in the weekly. So whenever Netflix comes out, let me just see, maybe somebody else say Netflix. No. Okay. I don't want to waste time. Whenever it is, it's coming out. And so far, if it can break above that high that was made on the 25th of March of 996.70, no. 998.70, 998.70. If it can close above that by Friday this week, I think that's very good action. So that was good. All right, now what we wanted to see is, I had another question here. Long. Okay. Oh, American Express, AXP. AXP is trading, it's just like all the others. Hasn't taken out that candle high of Wednesday. It's just kind of stuck there. Netflix Thursday earnings. Thank you very much, Pat. Pat in the Tiger YouTube gives me great information always. Thank you. All right. So as I said, somehow my aura at the close yesterday said, I think that we're going to be coming down today. We'll have a digestive phase. Doesn't say how much, just a day of rest. And that is still sitting with me saying, oh, really? But that's the way I felt about it, only because of the way the action worked yesterday. Let's just go back to the Dow for a moment. Look, INDU trading up 82 cents at 40,600. It's kind of struggling. And the longer it takes for that pink 9-period moving average to go positive means the greater the chance you could have a deflection lower. And we're going to be watching that very closely. So the support in the Dow right now is 40,200. The breakout will be not just going above the high of Wednesday, this last Wednesday, but really starting to test the 41,000s. And that's a long way. It's over 400 points higher. But that's the way I'd be looking at this market. Can you look at ASAN? ASAN. Now, why do I remember that one? That's Asana Inc. Asana Inc. A long time ago, I remember this. I wish I just had all the notations that I've ever had on charts. I'd be able to go back to the beginning of each stock's beginning in history, because I notated all the down, anyway, not the issue. The issue right now is it's trading at 16.04, up 49 cents. So now look, you've got this huge gap. Gaps like this that get filled in a very slow, methodical process very often suddenly come back into the body of the rectangle that it's working in. But if at any point, so let me show you. So this becomes the lowest low bar. You can put an up arrow there, and that becomes peak A right there. And of course, I've done this so many times, I can see, you can usually see if it's a penny higher or not. C, D, and Ian is still walking the 9-period moving average. So I don't know what that gap was. It might have been earnings, but when stocks gap down huge and almost immediately they don't take out that low, but within 2 bars, maybe 3 bars, they take out the high of the candle, the gap down candle. That's usually a good sign to say, okay, we can start working our way. It's like the upside down candle where if you have the sharp pullback and you have higher highs and higher lows, you can go to a peak D, just under, right on, or just above the high. This is the exact opposite. Now it's going up. So it's doing the same thing. So the low that was made right there, the gap, day before the gap down low, was on the 10th. That low was at 16.44. The high on Wednesday was 16.42. So far it's missing that. So I'm not sure why you're looking at this particular stock. Stumbled on it, and maybe nothing to want you to take. Yeah, I would just treat this as nothing right now. I need to see a concerted higher highs and higher lows to say that gap was a mistake, and now we're on the way up. I would just step aside for a moment. Let's look at it again.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back. So let me just do this in the brief moment that we have left. So I've been, wheat is down. There's a wheat continuous contract. What happened here? At W. Okay, come on. Don't have time to waste here. At W. There it is. Wheat has just been in a sideways consolidation for some time. Did make a peak G high way back in 2022, and it's just been lower lows and lower highs consistently. But wait a minute. Soybean, continuous contract, is attempting to find some kind of a base here. A very nice move to the upside. A strong breakout from to above the 1,033 resistance level. And it spiked up. This is a leg A. The weekly chart needs a lot of work, but corn I've been very favorably inclined to, and that's down 3 today at 481. But this is a much nicer chart. This is the chart that really impresses me out of those those grains. Now, the other thing that we're looking at here is the dollar, the DXY. The dollar is trying to form some kind of a bit of a base here, but it's taken out the left side low of September of last year. It just doesn't look great at all. And it's just gone sideways, and it's broken to the upside now in the rectangle. Now it's going to take out the left side. So it's telling us, Trump wanted in his first term, he wanted a lower dollar to help the imports, exports. So he's getting the EUR, USD. This is the euro dollar currency pair. Very strong. Why does it not update immediately? A very strong move to the upside. Peak C. It should still go to a leg D. That's the euro. The USD JPY, like the dollar, has been very weak. There it is. USD JPY. So let me just wrap this up by saying there is still internal strength here. This is not like a major crash type thing. This is, as I say, I think it was a man-made sharp decline. You wouldn't get the bank stocks acting as well as they're acting right now. I'm kind of impressed with the internal strength at this particular point.